Good morning, everybody. It is Friday, um, the 9th of April, and I just wanted to follow up on, since I got some good reactions on the stochastic tutorial, or whatever you want to call it, my take on stochastic oscillators. I thought I'd follow up a little bit with Bollinger Bands, because that's something that I also like to use, and theoretically right now, may be indicating that the market's broken. Why do I say that? Well, first of all, Bollinger Bands simply are tools that are used to measure the likely reach for a given security or instrument based on prior price action. I know that's, what the hell does that mean? Basically what it means is that if you take any given instrument, its current price, based on its past price action over a certain period, in this case, in the graph that I'm showing here right now, I'm actually using a 10 period. And this is on a daily chart of the SPX. I'm using a 10 period, which is a fairly, I wouldn't call it, it's not exactly super short term, but it's shorter term than intermediate term, which maybe would be 20 periods. So based on the price action over that period of time, if we were to assume a possible two standard deviations from a norm, we can expect that the price could reach as high as the upper band. It could be as low as the lower band. And a lot of people, take that a little too literally. As you can tell, sometimes it doesn't quite reach and touch the bands, but kind of oscillates in there kind of neatly like this. But you do see that the price action does, tend to stay within those bands. In fact, breaches of the band are what you're really looking for. And if it were as easy as saying anytime that it breaches the band, one direction or the other, that we're going to get some kind of reversal, that's a given, that would be, a mistake. That's not true. You have to also look at, when you look at the Bollinger Bands, you have to look at the shape and, their shape and whether or not they're expanding or contracting, rising, leveling out. All of these things mean something. So we have flattening, we have rising, we have expansion. All those things are really important. They tell you something. Expansion tells you that volatility is about to set in, right? Or has set in. In fact, these Bollinger Bands are not able to, nothing is predictive in a sense that nothing is ahead of price action, but it's more reflective. And once you start to see expansion, you can expect further expansion. It's just a tendency that you can add to your other analysis. But what's really interesting is that, generally speaking, there are piercings. There are eventually piercings and touches of that band. As you can see, this is a 100-day period. There are pretty close encounters or touches along the way. Even these are close encounters. These are all kind of riding on the top of the band, right? And these are riding down the band. Okay, this is a touch and a pierce touch. Now, what's interesting is that let's take a look at from this period here, from this day forward, which happens to be the 5th of February, which is when we set that low. We pierced a band. Okay, at that time, it wasn't super clear yet. We had this one little upswing, but at the same time, and that's, that opened up a little bit of volatility, additional volatility, because it was narrowing a bit, and then it opened up with this downswing, but then the top band started to kind of, flatten out as price started to rise, and the bottom band, started to take a little less severe downturn. Okay, so that told us that we were reaching bottom. And then we started this upturn. But we have not, since the 5th of February, we have not once pierced this bottom band. We haven't even come near it. And, speaking about broken, markets, if you really want to, continue that humorous kind of line of reasoning. The market's broken clearly at this point because this has been one long, nonstop rise, cluttering at the top of this band. So it's always been, supported by this 10-period moving average line, which remember, this is a 10-period band. So we've been kind of congealing on that in between these two, in between the upper Bollinger Band and the middle band, which is the middle line, which is the moving average. So it's actually kind of interesting to note that. Now, also you'll notice on this chart I do have the lower trend line supporting this ridiculous rise in the upper channel, which has been broken. It has been broken. It's the first thing that's showing signs of give, and that's why I introduced this wedge line up here. I talked about that the other day. We are wedging at this point, which again, wedges usually indicate drop off. And if you follow, I decided to kind of extend that wedge line back. And if you notice, that wedge line does follow and support roughly the former up channel line, which was in existence prior to the January period. And usually when you break, and you break through these channels, especially violently like this, okay, and then you start to rise, there's going to be a retest of that line. Now, we're doing that right now. The question is, do we re-enter that channel, or do we see what I'm seeing right now, which is just kind of rejection developing. And I know a lot of folks are saying, how can you say rejection? Look, you were up yesterday, futures are up today. Yeah, again, I'm not, I told you I'm not impressed by any of that right now. If we see a strong break of the wedge line and a close above this wedge line, which means that we have to close, and I believe that wedge line right now, we're talking somewhere in the neighborhood of, +5 on the S&P today, and we have a strong break of that line. Actually, if we have a strong break of the line, a comeback retest, and then a strong close above the original break, when that happens, at that point, then you can assume that this wedge is not likely going to develop into a breaker, which means that this rally could resume its march to into the 1200s, and again I told you I'm really not surprised. I wouldn't be surprised by that. I'm targeting around 1207 as the high point. It could go as high as 1250. A lot of people are talking about that number, but I also want to point out that if it does break, I'm pretty comfortable that this 1150 area is going to be tested, and if we break 1150, I think we're moving. We have the possibility of moving much lower and even eventually testing that 1040. Did I say 10? Yes, 1150. I hope. Okay. Anyway.